Hi guys, weekly market outlook and an interesting one. We got a ton of data this coming week, one of the last weeks obviously for 2024. Oh, what a piece of news. Anyways, FOMC committee, are they going to lower interest rates by 25 basis points or not at all? Might be the question. The Bank of England, BOE, is going to adjust potentially the interest rate. Actually not, because they're expected to leave rates unchanged. And the BOJ, the Japanese central bank as well, is going to adjust their interest rates moving forward. So welcome to the weekly market outlook, Saturday 19th of December, a couple of days until Christmas only. Sorry, 14th of December, not 19th. Anyways, a bit of a mistake here from my side. Yeah, what's up and running? PMI data might actually choose and give market momentum a bit of a boost actually. So we got the data from the Eurozone. They are expected to be obviously kind of not positive as we've seen in the past here. Detail wise, there's nothing much to be expected here from the past, but looking at the actual figures, this might give and continue the downturn in the economic development. However, looking at the euro-dollar currency pair, this has been on the rise recently, and that's actually something positive looking ahead here. Why? The falling trend line resistance area been retested a ton of times here, and now we might see the market shaking off the lows, potentially being ready to kind of strengthen somehow further. One reason, which is an upcoming one, is from the FOMC this week. We might get important information which is causing the market momentum to weaken slightly. However, the rate differential is going to be narrowed slightly, at least, if the Federal Reserve is going to loosen, to weaken interest rate moving forward. However, the economic situation remains still kind of quite shaky and rather negative in the Eurozone. So that might be just something which is causing the market momentum to be a kind of positive at some point at first, but then causing the downside momentum to continue. We can observe that the medium-term trend here, it was kind of quite weak retracement. Question mark, breakout to the upside or continuation pattern within the trend to the downside might be one of the questions moving forward. For now, it looks at least that this currency pair is about to weaken somehow further, depending on how the data is going to come out. Flash PMI from the UK might be quite interesting. We can see if we compare figures, the UK is at a better stand. However, the economy is one thing, the charts are another, because the charting pattern here in the pound against the US dollar, we saw that the recent trend just off this 50 moving average is about to basically weaken further. The downside momentum, important support zone, if it's been broken, the downside might continue. That zone had already been broken here, this area, so we are in not quite a free fall, but the pound's weakness indicated as well based on weekly charts. Looking now ahead into the monthly pattern, this recent supportive trend, this is the 50 moving average we see here. This has been broken again, and since we are trading right at the middle of the month of December right now, there might be further momentum to lower price levels moving forward. So that's the PMI data. Let's jump ahead a little bit, right? PMI from the UK Monday, early Monday, when the trading week basically begins for us. Then Thursday, we have the Bank of Japan. Let's come to this later, but we have the interest rate decision, and the decision is going to be kind of quite interesting. Not many members are about to cut interest rates again, apart from kind of as the forecast tells us. So 4.75% is going to be the expected rate. What if the bank is going to weaken rates again in a basically surprise move in this case? That could cause the recent trend we examined to weaken again. The pound US dollar, which had also kind of broken this medium-term trend, support, resistance, we talked about this, to weaken again further, a downside, potentially free fall whatsoever might continue, and hence obviously the pound going to basically weaken again against other currencies. So that's one of the big important figures we have right now. Furthermore, we have the FOMC, and what are they going to do? Are they going to really reduce interest rates as it's going to be expected? There's kind of different angles we could talk about in this case, but we examined the euro dollar. It is currently kind of stronger. However, the euro dollar as well, after the recent retracement, might start to weaken again. That could be something if the if the US dollar is finding some weakness, depending on the wordings. But during the press conference, maybe Jerome Powell says, hey, from that moment on, our wait and see approach is going to give us more leeway for the upcoming weeks, rather month ahead. This could stabilize the dollar again. So the euro dollar may be rising, and then finding, or investors and traders alike, finding entry points to sell at a higher level. The euro US dollar currency pair, highly volatile news event at that time, and looking at it from that perspective, what we can see is currently that the US dollar, remains somewhat rather strong. Silver markets, by the way, quite reactive here. We saw last week was not a positive one for silver. I remain in my long positions here. However, short term, in the next couple of weeks maybe, this looks kind of right ugly. And looking at it from the head and shoulder pattern, we could argue left shoulder, head, and maybe right shoulder in the making. The market might just basically start to weaken. If the neckline is being broken, I would drive the neckline at this level. If this level is being broken, then the market might slide again further. The 50 moving average might kind of really also act as a bit of a support area. It could be that this zone is not broken, that the market finds the target zone at around this line. But for now, left shoulder, head, right shoulder might give us further a negative sentiment in this silver market, at least for now, as the charting pattern confirms. And then now, based on monthly charts, that's exactly how it looks like. It looks like quite ugly. Only a break above the 32 US dollar level might indicate the market is breaking higher. For now, this one might indicate the market strengthens slightly, even maybe not towards the 31.40, say 31 level whatsoever, to then see prices falling. How much is the big question, because the market momentum here, let me reduce this one towards this area here. Resistance on the left, support here on the right, 28.50 might be the line in the sand until which this market might be about ready to fall somehow further. Does this mean that silver markets will weaken further? Well, we have a few different attempts and a few different angles. Looking at the economic development globally, including the Eurozone, it is going to be not bad. In the US, obviously, with financial support rather positive. However, in the silver markets, demand is by far outperforming the supply. But financial markets are a big play, obviously. They take part big time in this market environment, as paper silver obviously makes up a ton for those contracts. And the question is on how the leverage in the end will play out, and how the market momentum and the dollar's current strength will move momentum. Dollar weakness obviously would help this market to rise further. That's what we currently can't see quite a lot, because the dollar remains rather to the stronger side of things, and hence obviously is not really kind of doing anything much with the dollar strength potentially being present somehow further. Let's look at the dollar index. That one is currently kind of rising somewhat, right? And the market needs to break the high point, 106.90, 107. Only if this area is being broken, the upside might continue, as the chart suggests. So that is currently in positive momentum. Would I believe that the market is rising for now? I might doubt it. Somehow I would rather aim for a sideways pattern, acting at around this resistance area. The market finds quite some strong resistance towards the, let's drive it up to that level. The downside momentum might be the case. So I would opt for somehow dollar weakness here. Most traders, most investors currently expect the dollar to remain rather strong, as the economic outlook remains positive. Let's see, somehow that's at least my feel, that we might see after such a strong ride that the market corrects itself slightly, overbought, territory had been reduced already here in this market, so there would be room to the upside here. Nevertheless, downside momentum in the greenback might be here to come. That's more one and most of those important figures. PMI data we talked about, CPI data from Canada, kind of quite interesting here, right? Is this going to weaken really further? November data saw a surprise upside, not a lot, but figures are rising somehow. The consumer prices are again on the rise, and the US data might not be of much difference. Canada's data could be quite interesting here in this case too. The EURUSD currency pair, it is rising and has been rising, and there could be another attempt to run higher, right? So based on this market, the market basically last week, we saw the upside here, and this week, which is just about to be passed, the market kind of went to the downside in a corrective pattern, but increased momentum again. So a buy stop above the high could unleash momentum towards this resistance area. So there would be room, and then the market might actually even break out to higher levels. It depends on how this goes and how much momentum we will see in this market environment for now. That's for the euro against the Canadian dollar. Weakness, of course, if we get a surprise positive amount in terms of consumer price data, could basically pull this market again back to the downside. Why that? Obviously, if if consumer prices rise, it would be stronger for our current currency, and that could pull this market back to the downside again. Now, looking at it from the monthly chart, there could be entry opportunities again. The market had broken quickly this 50 moving average to then rise again. Any lowering of this market here, any break of say 147.70, 147.50 area might be taken into consideration for falling prices. That's at least for the euro against the Canadian dollar's potential weakness, and the US dollar, the greenback against the Canadian dollar, the loonie as it's called, keeps on rising without an end in sight. The trend kind of quite bullish, and again, long-term charts, right? Resistance area, market falling. Resistance area, market falling. Holy moly. Resistance area might be broken again with like a long wick like we've seen here in the past, and then we could see the market falling again. That's the big question mark we might have. However, the market's attempt to the upside might happen first, and then if we see in the next couple of weeks or month maybe some basic weakness in the greenback, this dollar cat might be ready to fall again somehow further, as we outlined here right now. So the market should be focused on some long-term price action. Just let's see how this goes here. The trend is to the upside, right? So we see that this momentum is still resistance slightly rising, so upside motivation might be the case. Guys, this chart reminds me a bit on crypto markets and what is going on at the moment with the crypto world. The crypto world is currently kind of quite interesting. Upside momentum still positive. Is there a ton of momentum in the upside? Bitcoin, Ether, XRP, through the roof, and Solana, question mark, but the upside is persistently positive, yet it fades. The momentum is going to fade, and I'll tell you why. There are some opportunities maybe to be spotted here in this market. Let's start with XRP, right? The upside seems to be ongoing. So there is the resistance area, technical resistance. The market broke all the way towards the more than three US dollar level. We have not been able to test this yet. 290 was the recent high point. Is that going to leave us with more upside potential? Let's examine it from this trend line perspective, looking at those prices, those parallel trend lines, and that's the same with the currency pair we just examined here. The market is trading currently slightly above this area. What if the market monthly chart? We still have 2 full weeks to go basically until this chart is going to end here. I still opt in XRP for a falling trend. This is too much of a volatile momentum to the upside. Now everyone is pretty much bullish. Everyone asking me, Frank, have you been trading crypto markets? Because I want to buy XRP. If the entire world basically more or less is going to buy, who's then left to buy when prices move higher? Well, the question is, traders might offload some of them. The markets have been rising so much. Profit taking is the key takeaway for this, and hence I would say careful trading here with these markets. We have on the weekly chart the market being able to break the lower point and then able to rise again. So currently, longer term, the market is just in a trend line, in a triangle formation, and this triangle is going to break obviously into one direction, either to higher levels as maybe the majority expects, but to the downside as well as a longer term price action shows, because then in the end you will say, hey, the markets were trading so high, we've seen this in the past, if the markets now break, this could open up room a lot to the downside. And hey guys, by the way, upside unlimited, right? Who is the trader takes unlimited trading momentum into one direction? Most people not. Downside limited to 99% basically, right? Towards falling prices. That's more than enough. If we capture small moves, that's in particular what we look for. By the way, guys, if you're interested into more content, just leave your comments below the video and check out as well our website fxstrategies.asia as well. Back to the charts here, the XRP token looking for now slightly positive, I might say. Medium term, I entered into some more short positions here. My long trades had played out, so now we exited, and we like to see a further momentum to lower levels. I would opt for something like this, hence small positioning. The market might extrapolate movement to the upside before falling, so be careful trading those markets. They could be deadly. Bitcoin, slightly different. It looks still positive, above the $100,000 level. $100,000. There is still momentum to higher prices, visible at least for now. The market seems to kind of move to the upside here. Are we at this price range here where then a surprise fall in the end is going to happen? At the moment it looks like the market might attempt another run to the upside here, and this attempt to higher levels might tell us we should be careful here. However, also at Bitcoin, I would opt for falling prices, but only say below 93, 91,000 or psychological 90,000 level could give us momentum all the way towards the next line in the sand, and that one kicks in previous resistance, now turning support. Say 70,000, 71,000 would be the area of potential next support here, and that gives us from 100k to 70k quite a bit of downside momentum if you only capture a couple of percentage points in this market. The Ether market is super interesting as well. On the weekly, we saw the same story, and we still have today and tomorrow's trading day in full here. The downside momentum has been negated, the market moving higher. I might still opt for upside here. A break above the high point here could open up the room to the upside. We are trading quite far off the all-time high in Ether, and that's the targetable area here, I might say. Ether might move towards 4,650, 4,660, 4,600 something. So momentum to higher levels still omnipresent in charts. Longer term, shorter term charting patterns suggest after the recent push lower, the market kind of stabilized again, potentially breaking out to the upside. By the way, Dogecoin, there were some issues. Seemingly not a hacker, but one IT engineer found some ways to reduce the number of active nodes. So there was a bit of a falling price, not that much, but for all these doji guys, maybe it is a bit dodgy as well to remain in Dogecoin. See how it goes. Some small fraction in a portfolio might work out. By the way, fraction of a portfolio. We saw that BlackRock gave investors some advice stating that, hey, in a balanced portfolio, 2% of a Bitcoin ETF might act positively in terms of gearing up momentum medium term. Obviously, they say this since they obviously offer that ETF, yet I would also agree to this one. It looks kind of quite interesting, and the market momentum and volatility might open up some opportunities medium term. Last but not least, for the crypto space, Solana's breakout. Well, the market retraced like most markets, nearly tested the $200 level. Say we go to 206, resistance on the left, support on the right. The upside might actually happen even above this level, which is 236. Another attempt to the upside might work above 255. So the market momentum could work out nicely as and if the Solana market is going to strengthen somehow further. Silver we talked about. Gold, nothing much. A breakout to the upside might happen above the high points. We looked at it last week. Check back our recent videos. We talked in depth about the gold market here as well. Furthermore, oil is not going to do anything much, but running to the upside. That's kind of quite interesting. Remain in this. The long-term short position here above, below 66.55. A new attempt to sell the market might work as long as the market remains below the 50 moving average and below this pin bar. So say below 74, below 77 US dollar, I might still remain quite bearish, which I think the market is going to be ready to weaken further. Demand and such a situation could play a role as well. Now you might ask, hey, what's going on with the stock market environment? Well, after this recent resistance trend line, once, twice, 3 times potentially, we could see that the S&P might still be ready for a run up higher. Now this looks a bit messy. I tell you what it is. This is like the COVID low all the way to the high. Subsequently, we saw a retracement all the way to this level here, which was the 50% Fibonacci retracement. Using that low towards the potential recent all-time high, if that's the case, then the market might actually also weaken by 50%, which would be exactly this area, resistance on the left, support on the right. So if the market starts to correct, 4,820 could be one of the range I might just opt in for a longer term profit target, looking into capturing the all-time move here, not all-time, sorry, the move from a COVID low all the way towards this recent expected high. A 50% move would act here at which level? I need to check it out here right now. It would act towards the 50% level just at this area, which would indicate again some interesting zone resistance, support here, 4,100. Anything in between could be something which, if the market corrects further at some point, and remember, kind of quite a few months, 17 months whatsoever, after the initial rate cut from the Federal Reserve, markets usually went lower, at least 30, sometimes 50%, and we could see that this is going to see something right now. Obviously now everything will be different. Markets only in one direction, which is to the upside, and that's currently at least true. S&P higher, NASDAQ to the upside again, the Dow Jones moving to higher levels, looking kind of quite good, but starting to correct already a bit. And we see that also our friend the German DAX is moving to the upside, so kind of quite interesting at times ahead this week. Guys, happy trading. I look forward to see you again. Leave your comments below, and just please don't forget to follow our channel here to get and not to miss any further updates here. We have a ton of shorts coming out this week because there are so many news events. We want to cover all those with all updates from our side. Talk to you soon. Thanks for tuning in. Have a good weekend, everyone. And don't forget to check out your charts next week during the interesting news events. See you then. Bye.